Right now, XRP is sitting close to a number everyone is watching: $1. If XRP falls below $1, the market is not the only thing being tested. Your plan is being tested too. So what really happens at $1? Is it a real line or a trap? And what should a long-term holder do before the stress hits? Let's dive in. This week, XRP has lost a support zone around $1.05, and it's now drifting toward a possible test of the $0.88 to $0.75 area. That means the famous $1 level is suddenly in play, and if you hold XRP, you already feel it. There's a question sitting in the back of your mind. If XRP drops below $1, does that mean my whole long-term plan is broken? That's a fair question. It feels rational. But here's what I want you to sit with for the next few minutes. What if the danger isn't the price at all? What if the real danger is what that number does to you? Let's start with the belief most holders have. The belief goes like this: $1 is a real line. Above it, XRP is fine. Below it, something is broken. And honestly, that belief makes sense. We grow up thinking in round numbers. A house at $499,000 feels cheaper than $500,000, even though it's basically the same. We do the same thing with crypto. $1 feels clean, solid, important. $1.03 feels safe. $0.97 feels scary. But think about that for a second. 3 cents. 3 cents is the difference between I'm calm and I want to sell. Nothing fundamental changed in those 3 cents. The network is the same. The use case is the same. Your thesis is the same. The only thing that changed is the number on the screen. That's your first clue. The $1 line is not telling you about XRP. It's telling you about psychology. So, if $1 isn't a fundamental truth, why does it move markets at all? Here's the part most people never explain. Round numbers are powerful for one reason. Everyone is looking at the same spot. Think about what gets stacked at $1. Stop-loss orders, cluster there. Leverage liquidations, cluster there. YouTube thumbnails, scream that number. News headlines, repeat it. And human emotion concentrates around it. So the level becomes powerful, not because $1 is special, but because everyone agreed to watch the same line at the same time. It's a self-made pressure point. And here's why this matters for you specifically. When a price gets close to $1, you're not just facing the market. You're facing thousands of nervous people reacting to the same number at the same moment. That's what creates the sudden drops. That's what creates the panic candles. It's not new information. It's the same old information hitting a crowded emotional trigger. The last time a coin you owned approached a round number, did you stay calm or did you feel that pull to act? Be honest in the comments. We've all felt it. Now here's where it gets serious for someone holding for retirement. Because a round number doesn't just scare you. It can push you into real, lasting mistakes. Let me walk you through 3 of them. First, forced selling. You see 99 cents. Your stomach drops. You sell in a panic. Then, 2 weeks later, price recovers, and you're locked out of your own position. Second, bad tax timing. This one is brutal, and almost nobody talks about it. If you panic sell, you might trigger a taxable event you never planned for. Selling at the wrong moment can mean short-term gains taxed at a higher rate, or realizing a loss you didn't actually need to take. A round number on a screen should never be the thing that decides your tax bill. Third, abandoning your thesis. You bought XRP for a reason, a multi-year reason. But $1 makes you forget that reason in a single afternoon. And notice something. None of these 3 mistakes were caused by the market. They were caused by your reaction to a number. That's the trap. The biggest threats to a long-term crypto holder usually aren't price drops at all. Look at the data. In the 2025 State of Crypto Holders report, 75% of holders said they were worried about scams and security, and 48% said they'd already taken losses from volatility itself, meaning losses from reacting badly, not from the asset disappearing. And on the security side, Chainalysis reported that by mid-2025, over $2.17 billion had already been stolen from crypto services in a single year, with personal wallets making up more than 23% of stolen funds. Think about what that's telling us. The people who lost the most often lost to panic, to bad security, or to emotional decisions, not to a chart touching $1. So when you stare at that $1 line and feel fear, ask yourself, is this number actually the biggest risk to my money? Or am I focusing on the one thing that feels scary while ignoring the things that are statistically far more dangerous? Here's the mental shift I want you to walk away with. Most holders think, if XRP breaks $1, something fundamental changed. But the more accurate way to think is, if XRP breaks $1, my decision process is being stress tested. Read that again, because it flips the whole situation. The market isn't asking, is XRP broken? The market is asking you, do you actually have a plan? Or do you just have a number? And that's a much better question. Because a plan survives a scary day. A number does not. When you make this shift, $1 stops being a cliff. It becomes a mirror. It simply shows you whether you prepared or whether you're improvising under stress. And improvising under stress is how good long-term holders turn into bad short-term traders. So let's get practical. Calm decisions are made before the storm, not during it. Here's what a disciplined holder does ahead of time. 1. Write down what actually breaks your thesis. Not a price, a reason. Maybe it's a regulatory ban. Maybe it's the network failing. Maybe it's a core use case dying. If $1 isn't on that list, then $1 is just noise. 2. Know your tax lots before you ever click sell. Understand which coins you bought, when, and at what price. That way, if you ever do sell, it's a deliberate choice, not a panic that hands you a surprise tax bill. This is exactly the kind of planning the resources in the description are built around. Retirement and tax strategy for crypto, done calmly, in advance. 3. Keep a cash reserve. If you have emergency money set aside, you're never forced to sell XRP at a bad moment just to pay bills. Forced sellers lose. Patient holders wait. 4. And maybe most important, decide right now that no round number will ever make a family or retirement decision for you. Not $1, not $2, not 50 cents. Numbers don't run your plan. You do. Notice what's happened here. We started by asking, is $1 a real line? And we ended somewhere completely different. We learned that $1 feels real only because everyone watches it. We learned that its power comes from crowded emotion, not from fundamentals. We learned that the true risk isn't the price. It's the forced sale, the bad tax timing, the abandoned thesis. And we learned the shift. $1 isn't testing XRP. It's testing whether you have a plan. So the next time you see XRP flirting with that line and you feel that tightness in your chest, pause. Ask yourself, has anything fundamental actually changed? Or is a round number just trying to make my decisions for me? That single pause, that single question, might be worth more than any chart you'll ever read. Because in the end, the market can cross $1 in a day, but a clear-headed holder with a written plan can't be shaken by a number.